Hi everyone, I'm Ken from CryptoTradingKS. In this video, we're going to look back at 2022. It's been a really interesting year for so many reasons. So let's run the numbers. In 2022, the Fed hiked rates faster than any other time in history. And we can see that the total nominal return in US stocks and bonds for each year since 1871, looking at 2022, it's the absolute lowest on record. To say it was a tough year would be an understatement. Global bonds and stocks saw the biggest ever loss in market value. When we look around the world, we can see the central banks all increasing rates. There could be more turbulence to come. When looking across the stock market for the past 12 months, Apple came down 27%, Microsoft 29%, Google nearly 40%, Amazon a little over 50%, Tesla over 65%. Looking at US indices, the SPY, the SPY, the S&P 500 came down nearly 20%. The QQQ came down 33.49%. But it wasn't all bad. Some of the sectors were actually green, but the vast majority were red. We can see the US indices were down, technology was down, US energy did actually quite well, but you wouldn't want to pick ERY or DUG. Healthcare was also down, but not as much as the US indices. Consumer cyclicals were down, real estate came down, the VIX came down, leverage came down, fixed income US government, it came down, as well as fixed income in corporates and US dividends. Developed markets, emerging markets, gold miners, all came down. Gold just came down 0.09%. Natural gas came up, crude oil came up, and energy came up. Precious metals put in a little bit of a rally. US large cap, growth, value, mid cap, blended, and US small caps all came down. Financials felt the heat. Basic materials and industrials came down, as did utilities. We can see the corporate earning estimates in Europe and the US took a little bit of a downturn in late 2022. Mortgage rates and the federal funds rate are historically high even after the recent dip. And you can see from 2020, payments roughly doubled on housing costs. Monthly mortgage payments since the start of the pandemic. Not surprisingly, delinquencies are on the rise. People just can't pay their bills. Savings are dwindling and debt outstanding is increasing, as are the rates to service that debt. Owners expecting better business conditions over the next 6 months. We can see it's a really low reading. And these are the forecasts for the end of 2023 for the Treasury yield, 2-year, 5-year, 10-year, and 30-year. I've also put in the 2022 closing levels of those particular Treasury yields. What we can see here, basically, the large banks are expecting Treasury yields to fall, and that means bond prices are going to increase. China's GDP growth is set to slow further before picking up. And we can see euro area inflation is still increasing, but it looks like it's starting to turn down. Europe was very much like the US market. Energy, basic resources did quite well. Investors and traders capitulate. When they just give up on a market, they say, enough is enough, I'm selling everything. Unfortunately, this is typically at a time where the market tends to reverse. Also, traders and investors can get caught on the wrong side of the percentage. What you see here is WTI, West Texas Intermediate Oil. We can see it moving with a kind of a directional correlation with the federal funds rate. A lot of people will be looking at energy and oil and saying, wow, it went up. Oh, it's safe. I'm going to put my money there. You can make money even in a down market if you're buying at the right time. But the key is when everybody's getting into something, it's probably the time to get out. And when everybody's getting out of something, it's probably the time to get in. I love this particular chart because it tells a very powerful story. This was the worst year since 2018. That was 2022. European stocks slumped this year, overgrowth and policy concerns. Look at 2018. They would have been saying the same thing. What happened in 2019? Oh, hang on a second. Please keep this chart in mind. Turning to the crypto market, the performance over the past 12 months, Ethereum down a little over 68%, Bitcoin a little over 65%. We can see in blockchain infrastructure, BNB, ADA, Matic, DOT, all were down quite heavily. You can also see that Tron did very well. In DeFi, Uni, Aave, Cake, Maker, Rune, LDO, a lot came down. Yet there were some signs of green inside the market. The meme coins came down. Zooming into currency, Bitcoin XRP, Litecoin, Bitcoin Cash, XMR, ZEC, DAX, they all came down. In blockchain services, Quant did quite well, down far less than its counterparts. And again, there were some areas of green. In the NFT space, NFTs got hit super hard. We can see the socials came down, but Santos did quite well, and AOG and Vib did well as well. In GameFi, Axie, Sand and Mana got slapped around the head in a big way. Gala wasn't throwing any parties at all, down 96.4%. In CFI, TWT Trust Wallet was an outstanding performer. You might have seen this particular chart floating around. Bitcoin total supply held by long-term holders. There are a couple of ways to statistically look at this particular diagram. One way is how retail interprets it. It's basically, wow, there's a strong accumulation. More and more long-term hodlers are hodling. And that's not necessarily incorrect. But why and how is this happening? When the short-term hodlers, when they depart, and the medium-term, when those holders depart, by definition, the long-term pie must grow much longer to accommodate the exits of the other classifications. I believe that's what's happening here. As you're still in the market, you've gone through tremendous adversity. And something to keep in your back pocket is the knowledge adversity is the doorway to success. Yesterday's comments were incredibly, well, they were just magnificent. As a global family, we're quite a collection of people. Bound together by positive excellence, we just want to see everybody succeed. And I just grabbed this little thing because I think it's awesome. Be brave enough to suck at something new. In 2023, you might want to pick something new to look at, some skill to learn. And don't worry about sucking at it to start with. That's how learning works. If we already had mastery every time we pick up something new, it wouldn't be called learning. Apologies for the delay in this video. I basically spent the whole day researching. A lot of people on social media are calling for $10,000 Bitcoin. They're calling for markets to bottom out in the second quarter, heading towards the third quarter. One thing that we understand, there are a lot of stories out there, because what happens is that each person, each analyst, each expert even, looks at a specific part of the elephant, which is the market, and they can assess things differently, some better than others. We do not do story-based analysis through the CTKS method. We actually do objective dynamic market structure. Market structure is something very, very special. We don't need to rely on recent indicative price, and therefore we don't make up stories. We just look at the smart money buy levels and the smart money sell levels, and we observe. The question now becomes, what are we observing? Bitcoin is currently trading at 16,535. We have two smart money sell levels above at 16,812 and 16,889. A lot of people are predicting $10,000 Bitcoin, and no matter what the price is of crypto at the end of the year, you're still in the best possible market you could be in if you love volatility, because this market loves volatility. Because we applied the CTKS Method Standards Certification process. We don't guess where market support and market resistance could reside. We know it, where it actually resides. And the next level of market structure support is at 15,674. The next structural support level below that is 15,439, and below that 14,979. We always acknowledge that price can go in 3 dimensions. It can go up, it can go flat, and it can go down. And market structure is about understanding how to react to those 3 different conditions. What we understand, if Bitcoin goes up, it will get challenged at the 16,812 and 16,889 levels, first and foremost. If selling pressure reigns and price is pushed down, it is likely to go to 15,674. If we clear the 16,889 resistance level, the next resistance level where smart money will be selling will be 17,665 and 17,856. If we don't hold the 15,674 mark, 15,439 and 14,979 come into play. ODMS, or Objective Dynamic Market Structure, lets us know that there's a lot of support around the 13,890 level. A lot of support. If we don't hold the 14,979 level, a journey towards 13,890 would be on the cards. And going the other way, if we actually get above 17,856, the next smart money sell levels are 18,225 and 18,471. You can think about these support levels, these SLs or Stanfield levels, as being like safety nets when they exist below price. If price falls, they'll catch it. That's very nice of them. What you can see here, as price comes down, it can get caught by these levels. That's why they're so important to understand. If price makes its way downwards, and I believe there's going to be a lot of volatility inside global markets. In terms of investing, volatility can be an absolute nightmare, but in terms of trading, it can be an absolute gift. If you're only investing now, it is time to learn how to trade. It's a really, really important skill to learn. Investors tend to look at the macro outlook over years potentially, but traders are very, very different. They look into timing and they look to understand, to know what smart money knows. And if you want to know what smart money knows, just simply go across to the CTKS Method Standards Certification. You'll find out and you'll be able to do it yourself. Knowledge transfer is the central focus of our community. When you know where smart money is going to lean in and support the price, you can have a very different experience of the market. Being able to put these SLs, these Stanfield levels, on your chart is an absolute game changer. When it comes to can Bitcoin go to 10,000? Well, anything can do anything, but that's not the real question to ask. The real question to ask is what is it going to do if it was on its way to 10,000? And the answer is it would stop at these smart money buy levels, especially this 13,890. And as we go through this market together, I will reveal more and more of these levels underneath that 13,890 level. One thing to always bear in mind, when the markets are red, the news headlines are red. When the market is green, the news headlines are green. Do not get sucked into news narratives. It will misdirect you every single time. Just watch the SLs with objective dynamic market structure and it will be a total game changer. Always keep in the back of your mind, if the market is red, if it's going down, the news headlines will be red as well. It will always be doom and gloom. Newspapers, media outlets have to actually reflect what is actually happening right now. As soon as it turns green, the news headlines will turn green with it. Do not make your decisions based on news headlines. It's a very, very costly mistake. The other thing to keep in mind, as Bitcoin moves, so too does the entire crypto market. If Bitcoin is going down, crypto is going down. with a 99% probability. For now, all you need to do is keep your eye on 3 levels. The first level is the smart money sell level at 16,812 and the second one 16,889. The third one is the smart money buy level at 15,674. Happy New Year everybody, thanks for watching and I'll see you tomorrow.